start watching for. And when you see this as a trade log outcome purely on the gold, you'll see that gold went into an offer watch almost on all the rally phases. You see that? So we had the offer watch at 1350. So 1351, of course. So 1350 candle is going to be 1349, right? So gold went into an offer watch into that price there. And you can see, obviously, since then, it's obviously just rolled over just a little bit, enough to get a stop in at break even, worst case. 1344, another offer watch. So we go backwards and we see 1344 is on this blue candle here. There's the blue candle offer watch. There's the level you'd have been offering into. And another opportunity to sell into that level makes just a little bit of sense. 1343, same trade, basically 1342 and 1333, different trades. 1333 bid watch. So you can see 1333. So there's the 1331, there's the 1332 candle. So that closes at 1333. Bid watch. So there's your bid right there. So there's your gold buying opportunity into that candle, correct? Your gold buying opportunity into that candle there. Remember that candle at 1332 closes at 1333 exactly. And 1333 exactly was where the bid watch came in. 1332 is obviously that trade, right? 1332 is this trade. Well, that's a bid watch as well. And obviously you can see that that's on an uptick. So we're not going to get a bid on an uptick. So we've got to wait for the downtick for the bid to come in. The gold offer watch, however, was at 1318. So if we look at 1318, we'll see that the gold offer watch was this candle here, 1317 candle. That's where we got the offer watch. Now you can see it was a little bit cheeky, because you can see whilst we got the offer in at that price, you can see obviously there was a big sweep on the stops prior to the drop taking place. So whilst it would be lovely for everybody to imagine that they were able to make a beautiful swing on that sell, of course, the reality is they would have been scratched out as the price traded back up to this area in the first place, assuming you wanted to hold the trade. So therefore, you'd have been a little bit unlucky. You'd have ended up with a +1 on the data itself. And obviously then the plunge came in and you would have not have been on board unless you manually obviously kept your stops nice and wide on the basis of a data release, if you were in the trade at all, of course. So you can see that the last series of trades, very profitable if you held it, very profitable regardless of whether you held it, because it was almost straight line north, and reasonable on the sell and reasonable on the sell, making some nice monies, $200 on each of these two trades. And obviously coming off the 28.5, you're looking at around about a $750 of upside potential on that buy there. So that's very good. And obviously if you decided to close this trade out ahead of the data, you would have probably have been bidding back in at 32s, selling at 35s, $300 on the sell. And obviously that series of last four trades, series of four trades, you've done over $1,000 per contract trading into those bid and offer watch areas. So a pretty good outcome for your gold trading. That's a nice way to make a living. And, you know, pretty solid, pretty good to spot levels, pretty easy to recognize the concept behind it. And obviously, you know, working out well.